Most free indicators are garbage. But this one, I'm about to show you rivals tools that cost hundreds of dollars per month. Look at how cleanly it identified this trend. The green band marked dynamic support at every pullback, giving you 4 perfect entry opportunities in a single move. But the best part is, it automatically flips from showing support in uptrends to showing resistance in downtrends, keeping your chart clean while showing exactly what matters. To add this indicator to your chart, first, head over to TradingView and pull up any chart you want. I'm using the 15-minute time frame on EURUSD, but this works on any market, any time frame. Click on Indicators and type in Fractals Trend. Make sure you select the one by Big Beluga. Now, what makes this free tool shockingly accurate? It's how it leverages fractal swing points to define dynamic support and resistance. A high fractal forms when the current high is the highest in a defined range, and a low fractal forms when the current low is the lowest in that range. The indicator identifies these fractals using a customizable length, then stores the most recent ones in a rolling memory system. It keeps arrays of recent high and low fractals, limited by your defined storage quantity. And as new fractals form, older ones shift out of memory. Then it calculates the average of these stored fractals and plots it as a clean band on your chart. So when price crosses above the average of high fractals, the band turns green and acts as dynamic support during the uptrend. But when price crosses below the average of low fractals, it turns orange and acts as resistance during the downtrend. This indicator is excellent. But if you're trading at prop firms, here's the problem. Most indicators aren't built for them and often fail from drawdowns. That's why I no longer trade strategies like this manually. Instead, I trade strategies with low drawdowns, high consistency, and years of data, like these, that are specifically built for passing prop firm challenges. And the best part? They're fully automated too. So trades run 24/7 across every market, meaning if you have a job, family, and no time to trade, that's no longer an issue. So if you're serious about passing your next challenge, click the link in the description below. To get maximum accuracy from this fractal system, let's get your settings right. Double-click on the indicator to open the settings panel. First parameter you'll see is fractals detection length, which controls how many bars on each side are required to confirm a fractal. Lower values like 3 or 4 create more fractals, better for scalping where you want quicker trend shifts and faster adaptation. Higher values like 7 to 10 create fewer but more significant fractals, perfect for swing trading where you want to filter out minor swings and focus only on major structure. Next is fractal storage, which determines how many recent fractals the indicator stores in its memory arrays. Lower values like 2 make the indicator more reactive to recent swings, which means the band will shift quickly as new fractals form. Higher values like 5 create smoother averaging because you're incorporating more historical fractals. Thus, the band moves more gradually. For bands type, you've got 3 options here. Average gives you the smoothest, most balanced trend following. Min-max creates a tighter band closer to price for more aggressive entries, and median provides middle ground between the two. For most traders, average works best because it balances responsiveness with reliability. Now let me show you 4 ways to use this indicator, building from basic to advanced. For trend following, this is your foundation strategy. You want to use the band color as your directional filter. Green band means you're in an uptrend. Only look for long opportunities. But orange band means downtrend. Only look for short opportunities. This simple rule alone keeps you out of more losing trades than you can imagine because you're never fighting the structure. Entry timing is critical though, as you don't want to enter when price is far from the band. Instead, wait for price to be near the band or touching it. In uptrends, enter longs when price pulls back and touches the green support band. In downtrends, enter shorts when price rallies up to the orange resistance band. Stop loss goes just beyond the band. Target the previous swing high in uptrends or previous swing low in downtrends. For pullback entries, it refines your timing even further. First, confirm you've got an established trend. The band should be clearly one color, not flickering between green and orange. Next, wait for price to pull back toward the band. Watch for a bounce or rejection when price touches it. Often a triangle marker will appear right at this touch point, confirming a new fractal is forming. That's your visual confirmation that structure is holding. Enter on the confirmation candle, the candle that closes back in the direction of the trend after touching the band. Place your stop just beyond the band and target 1.5 times your risk. For break and retest setups, you're catching trend flips at the earliest stage. Watch for price to break through the band. When price crosses from below to above the band, the trend is attempting to flip from bearish to bullish. But don't chase the break immediately, as this is where most traders get trapped. Instead, wait for price to retest the flipped level. Essentially, the band should change color, confirming the new trend direction. If price was below an orange resistance band, broke through, and now that level is acting as green support, that's your perfect retest entry. Enter longs on the successful retest and place your stop below the band. For structure confirmation, combine this with higher time frame analysis. Use the triangle markers to identify key swing points on your trading time frame. Then zoom out to a higher time frame and verify these fractals align with larger structure. For example, if a fractal low on the 15-minute chart aligns with major support on the 4-hour chart, That's a confluence zone with high probability. Only take trades where your lower time frame fractal signals agree with higher time frame structure. This filter alone dramatically improves your win rate. Now, just before we get into optimal settings, don't forget you can now join hundreds of traders in our community automating strategies like this on their accounts, which means you no longer have to spend weeks testing and hours behind a screen, all just to potentially blow your account. So click the link in the description to join our community and get the automated strategies today. Now, different markets require different settings, so let's optimize for each one. For forex pairs, keep detection length at 5 and storage at 3. Use average for your bands type. Focus your trading during session overlaps. London, New York especially, when trends are cleanest and fractals are most reliable, because during overnight low volume periods, the fractal structure can give false signals. For crypto, reduce detection length to 3 or 4 and drop storage to 2. Use min-max for bands type to keep the band tighter to price. Why these? Because crypto moves explosively and trends shift fast, so you need more reactive settings that catch these momentum changes early rather than waiting for confirmation from slower moving averages. For stocks, increase detection length to 7 and raise storage to 4. Use average for bands. Stocks have more developed swing structures that take time to form, so these longer settings filter out intraday noise in choppy market conditions, while clearly identifying the major support and resistance levels that institutions respect. This works especially well on daily and 4-hour timeframes for swing trading. For gold, keep detection length at 5 and storage at 3. Use median for bands type. Gold has violent swings that can trigger premature fractal formations if your settings are too sensitive. Thanks for watching and see you in the next one.